Jeremy, the project feasibility study came out this week. Congratulations on that. What were the key highlights from your perspective?
Yeah, thank you very much. We're very pleased with the study. It demonstrated that Araguaia is a long life, high grade nickel project. It will sit at the lower end of the cost curve. It will also have a high grade first 10 years of its mine life, so it'll be in all the places it should be. Low end of the cost curve, high end of the grade curve. The economic returns are compelling, and it effectively green lights the next stage of development for the project.
So tell us about the economics of the project.
So the base case in the feasibility study is using a nickel price of $14,000 a tonne. That's flat through the model. And using that price, it gives an internal rate of return of 20% and a net present value of 400 million. And over the life of mine, which is 28 years, it generates $1.6 billion of free cash flow after payback of capital. So it's a massively cash generative asset. I think if you then look at what the consensus price is for nickel at the moment, which is around $16,800 a tonne, that net present value goes from 400 million up to $720 million, and the IRR goes from 20% up to 28%. So massive gearing to nickel price. And the other key number is the C1 cash cost. That's $8,190 a tonne, which puts you at the lower end or the lower quartile for nickel laterite projects globally. So it is a robust asset.
So how does the project fit in from a global perspective?
I think there's a couple of metrics to look at. One is obviously grade profile, and we've touched on that briefly, but if you look at all of the South American nickel laterite operations, which are using the same process technology, we will have 10 years at close to 2% nickel, and that will put this as one of the highest grade deposits globally not developed today. So high grade. And then in terms of cost, our C1, which is a measure of cost of production, will be in the lower quartile globally for nickel laterite. So it is exactly as we set out to be. It's a tier one asset.
The nickel market is obviously key. Tell us how you see it developing over the next 4 years when you come into production.
Yeah, I think the nickel market is compelling at the moment. We've had a period, if we went back 2 years ago, nickel prices were trading around $7,500 a tonne. We've now seen that price increase, and it hit a high this year of 15,000, and it's come back a little bit in the last few months. But if we look at demand, demand is driven by stainless steel. That is robust, and mid-term forecast for nickel is it's going to grow at around 2 to 4% year on year. In terms of metal inventory, there's been a lot of talk over the last 2 years of nickel inventory on the London Metal Exchange and the Shanghai Future Exchange. Today, we're now sitting at levels that we haven't seen for the last 5 years. So there's been a big drawdown in metal stocks. So all the things you want: robust demand, nickel stocks drawn down, and finally, very few new projects at the scale of Araguaia in that pipeline. And any new project today, from discovery through to first commercial production, in terms of this scale of project, will take anywhere between 8 to 10 years. And our focus has been to get Araguaia ready to go at the start of that nickel price cycle, and I think we're very well positioned to do that, and we're a very unique asset in terms of that.
Now, Jeremy, you're producing ferronickel. Why is that important?
Ferronickel is a high quality product, and we're going to be producing Fe 30, which will go directly into the stainless steel mills, and it grades 30% nickel and the balance is refined iron. The key thing about producing ferronickel, it's using a technology called rotary kiln electric furnace. This is a well utilized process. There are 40 mines around the world using it. It's been financed many times, and it's de-risked, and that's a key part of any mining project. Can you extract the mineral from the ground? And in this case, we've done full piloting, and we're very comfortable that this process is amenable to the project.
So robust economics for the project. Tell us about the development pathway.
Yeah, so the feasibility has obviously been delivered. The next major milestone is the construction permit. All of the information and material has been filed with the agency for that. And the aim is that will be awarded towards the end of this year or Q1 next year. In parallel, we're working on a PEA to show what the economics of a second process line deliver. So taking production from 14,500 tonnes of nickel up to 29,000 tonnes of nickel. And then in parallel with all of these work streams, we'll be working on the construction financing, which is the key step to get this as a construction ready project.
Now you've completed the project feasibility study. The financing is obviously an important element. How's this progressing?
So the feasibility was obviously the start point of that process. That is what all the funding groups want to see. We've had strong interest from the private equity arena, the commercial debt providers. So there are probably three broad packages of construction finance that sit out there. One is the traditional debt equity route, and that will be somewhere around 60 to 65% provided through commercial debt. The other route is private equity, and then we've got the strategics and the off-takes, and we will be exploring all three routes in parallel with the aim of having a construction financing package at the end of Q2 next year, and then the board can make a decision on which route adds the biggest value for shareholders.
And news flow over the next 6 to 12 months, what should investors be looking out for?
I think it's going to be a busy time. We've touched on the main milestones ranging from the PEA, the construction permit, to financing, offtake. We've also got the Vermelho asset, which is potentially mine number 2. There's a PEA underway on that, which we aim to deliver early next year. And that will show two options, looking at potential to produce battery grade nickel and cobalt from the asset, and also as a standalone facility at Vermelho. So I think it's going to be a very busy time, and it's an exciting time for the company, and there's a lot of intrinsic value that we're building into this story.
So finally, Jeremy, what's the key message to shareholders and potential investors?
I think the key message is Araguaia is a tier 1 asset. The feasibility study has delivered a robust set of economics. It's a unique asset class in terms of being production or development ready in a space that the demand is compelling. And it's an asset that we've taken from discovery through acquisition of adjoining projects from Teck and Glencore all the way through to feasibility. And now we're starting the next phase of that exciting journey through to development and production.